Good morning, traders, and welcome to BCR's morning market analysis. First up, let's have a look at the US dollar. The DXY pushed up to around 99.5, which is its highest level in nearly 7 weeks. This was supported by signs of ongoing economic strength. Weekly jobless claims came in well below expectations, reinforcing the view that the labor market remains resilient and easing pressure on the Federal Reserve to cut rates aggressively. Um, Markets continue to expect the Fed to hold rates steady this month, with the two cuts priced in from June. Political noise around the Fed eased after President Trump said he has no plans to remove the federal chair Powell, while geopolitical uncertainty remains in focus after Trump hinted at delaying action against Iran, alongside new trade measures on key minerals and AI chips. Technically, the dollar index is consolidating near 99.35. Resistance sits at 99.5, followed by 99.82, while downside support is seen around the 200-day SMA near 98.72 and then 98.5. Next up, let's have a look at crude oil. WTI is trading near $59, down around 2% following a sharp rally driven by rising Middle East tensions. Iran warned neighboring countries of retaliation if the US launches military action, while reports of personnel evacuations from a US base in Qatar have heightened supply concerns. But no major troop movements have been confirmed, but the headline sensitivity still remains elevated. President Trump's tariff threats toward countries dealing with Iran have added to uncertainty, increasing some volatility across the energy markets. From a technical standpoint, crude recently broke above the $60 psychological level and now is trading below that $60 psychological level. Resistance is seen near the 200-day SMA at 61.98, with support around the 57.93 level, followed by 56.19. Next up, let's have a look at gold. Gold remains firmly supported, trading around $4,612 per ounce after reaching record highs. Safe haven demand continues to rise amid geopolitical tensions in the Middle East and ongoing Russia-Ukraine conflict. At the same time, uncertainty over the Fed's policy path and inflation's long-term trajectory has reduced the appeal of any dollar assets. Concerns around the central bank's independence have also resurfaced, which indirectly are supporting gold. Technically, the break above previous highs confirms strong momentum, but $4,600 now acting as as a key psychological level. Upside focus naturally shifts towards 4650 and the psychological level of 4700 and 4750, while traders still remain alert to potential profit taking after overbought conditions. Lastly, let's have a look at the Australian dollar, which traded near 66.98 in the Asian session. The gains faded after Australia's expectations of inflation eased to 4.6%. The RBA continues to hold rates at 3.6%, noting inflation has retreated from its peak, but showing some signs of renewed pressure. The pair has remained range bound, moving between 66.60 and 67.50 this week, while the broader uptrend remains intact. Momentum has softened. The 66.90 area remains pivotal, with RSI easing towards 55, suggesting slowing momentum but a still positive bias. A break above 67 cents would support upside continuation, while a break below 66.60 would weaken the near-term structure of the Australian dollar. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.